Introduction. Hello everyone. In today's class, we are going to learn the next stage of the accounting cycle, which is called summarizing of transactions. After recording transactions in the journal and posting them into the ledger, the next step is to summarize those ledger accounts. This summarizing process is done by preparing a trial balance. So today we will understand what is trial balance, its features and objectives, and most importantly, how to prepare trial balance using the balance method. Let's begin. Meaning of trial balance. Trial balance is a statement that shows the debit and credit balances of all ledger accounts on a particular date. It is prepared mainly to check the arithmetical accuracy of the books of accounts. In simple words, trial balance helps us check whether total debit is equal to total credit. The father of accounting, Luca Pacioli, once advised that a merchant should not go to sleep until the debits equal the credits. This clearly shows the importance of trial balance in accounting. Features of trial balance. Now let us look at some important features of trial balance. Trial balance is prepared on a specific date. It is not an account, but a statement. It contains the balances of all ledger accounts. The total of debit balances must be equal to the total of credit balances. If both sides are equal, accounts are considered arithmetically accurate. If they are not equal, it indicates that some errors have occurred. Even if the trial balance agrees, it does not guarantee that the accounts are completely correct. Objectives of trial balance. Trial balance is prepared for several purposes. The main objectives are: first, to ensure the arithmetical accuracy of books of accounts. Second, to provide a base for preparing final accounts, such as the trading account, profit and loss account, and balance sheet. Third, to help in detecting certain errors. And finally, it helps management by providing a summary of all ledger balances. Methods of preparing trial balance. There are three methods of preparing a trial balance: total method, balance method, total and balance method. However, in modern accounting practice, the balance method is the most commonly used method because it is simpler and more practical. So today we will focus on the balance method. Balance method of trial balance. The balance method is based on a simple principle. If equals are subtracted from equals, the remainders are equal. Under this method, we do not take the totals of ledger accounts. Instead, we take only the closing balances of each ledger account. Then, debit balances are entered in the debit column of the trial balance. Credit balances are entered in the credit column. This makes the trial balance simple and easy to prepare. Given below is a ledger extract relating to the business of X & Co. as on March 31, 2022. Prepare the trial balance by the balance method. Here, we can see a list of ledger accounts created. Based on this, we need to prepare the trial balance. Steps to prepare trial balance, balance method. First, prepare ledger accounts. Post all transactions from the journal into their respective ledger accounts. Then, balance each ledger account. Find the difference between the total debit side and total credit side. This difference is called the balance. Write it as balance carried down on the smaller side. Then bring it down as balance brought down on the opposite side. Then, identify nature of balance. If the debit side is greater than the credit side, it results in a debit balance. If the credit side is greater than the debit side, it results in a credit balance. Then, list all ledger balances. Prepare a trial balance with two columns, debit column and credit column. Write all debit balances in the debit column. All credit balances in the credit column. Do not include totals. In this method, only balances are recorded, not the total of ledger sides. Then, calculate total of both columns. Add both debit and credit columns separately. Check agreement. If debit total is equal to credit total, then the trial balance is correct. If not, there are errors in accounts. Understanding the ledger accounts. Now let us understand how different ledger accounts appear in the trial balance. Cash account. Cash is an asset of the business because it represents money available for business operations. Assets normally have a debit balance. Cash increases when money is received and decreases when payments are made. After balancing the ledger, the remaining cash balance will usually be a debit balance, and therefore the cash account appears on the debit side of the trial balance. Furniture account. Furniture is a fixed asset used in the business for a long period, such as tables, chairs, and office fittings. Since it is an asset, it normally has a debit balance. When furniture is purchased, the account is debited. Therefore, the furniture account appears on the debit side of the trial balance. Salaries account. Salaries represent payments made to employees for their services. These payments are considered business expenses, and expenses are always debited in accounting. Therefore, the salaries account will have a debit balance and is shown on the debit side of the trial balance. Shyam's account. Shyam represents a creditor, meaning the business has purchased goods from him on credit. Creditors represent liabilities, because the business owes money to them. Liabilities normally have a credit balance. Therefore, the balance of Shyam's account appears on the credit side of the trial balance. Purchases account. Purchases represent goods bought for resale in the business. Purchases are treated as a business expense, because they form part of the cost of goods sold. Expenses have a debit balance, so the purchases account appears on the debit side of the trial balance. Purchase returns account. Purchase returns occur when goods bought from suppliers are returned due to damage, defects, or other reasons. Since this reduces purchases, it is considered the opposite of purchases. Therefore, purchase returns has a credit balance and appears on the credit side of the trial balance. Ram's account. Ram represents a debtor, meaning he owes money to the business for goods purchased on credit. Debtors are considered assets, because the business expects to receive money from them. Assets normally have a debit balance, so Ram's account appears on the debit side of the trial balance. Sales account. Sales represent the income earned by the business from selling goods. Income accounts normally have a credit balance. Therefore, the sales account appears on the credit side of the trial balance. Sales returns account. Sales returns occur when customers return goods that were previously sold. Since sales returns reduce sales revenue, they are considered the opposite of sales. Therefore, sales returns has a debit balance and appears on the debit side of the trial balance. Capital account. Capital represents the amount invested by the owner in the business. From the business point of view, capital is treated as a liability, because it represents the owner's claim on the business assets. Liabilities normally have a credit balance, so the capital account appears on the credit side of the trial balance. Important note for students. In the balance method, we record only the closing balance of each ledger account. That is why the trial balance becomes shorter and easier to understand compared to the total method. This is also the reason why most businesses today use the balance method. Limitations of trial balance. Even if the trial balance agrees, some errors may still remain undetected. For example, errors of omission, errors of principle, compensating errors. Therefore, trial balance proves arithmetical accuracy but not complete correctness of accounts. Conclusion. To conclude, trial balance is a very important statement in accounting. It helps us verify whether total debits equal total credits and provides the foundation for preparing final accounts. Among the different methods, the balance method is the most widely used method in practice because it is simple, practical, and efficient.